Hello, Jeff Roltgen, the Tax CPA here. Today we're going to discuss IRS payroll tax deposit penalties. Penalties may exist if you don't make required deposits on time or if you make deposits for less than the required amount. The penalties don't apply if any failure to make a proper and timely deposit was due to reasonable cause and not because of willful neglect. So, if you receive a penalty notice, that would be the time to explain why you believe reasonable cause exists. Now, the IRS determines the penalty amount based on how late you make the payment. There are 4 levels. The first level is 2%. That applies from day 1 until day 5 being late. The second level is 5% for deposits made 6 to 15 days late. The third level is 10%. Now this one starts on the 16th day you're late and applies all the way until 10 days after the date of the first notice you receive from the IRS asking for the tax due. Then the fourth level is 15%, and that applies to amounts that are still unpaid after the 10 days following the date of the first notice you received from the IRS asking for the tax due. Now, the IRS also applies a 10% penalty on amounts that should have been deposited, but instead were paid directly to the IRS or paid with your tax return. Now, note, the late penalty amounts are based on calendar days from the due date of the liability. Now, I can help with IRS payroll tax deposit penalties. Call my office 208-619-9517 to schedule a payroll tax review today. Thank you.